5, Intel will be in focus, where the chipmaker reports earnings after the closing bell. Analysts are expecting adjusted EPS of 8 cents a share and revenue of $13.38 billion. The stock hitting a 4-year high this morning before pulling back ever so slightly. So joining us now is Michelle Connell, who's the president and owner of Porsche Capital Management. Thanks so much, Michelle, for joining us today. So what are your expectations from this company come this afternoon?
Thanks for having me, Sam. Well, I think everybody is so excited about where Intel is with their new chip, the Panther Lake. And that is where the momentum has come from, especially this year with the stock being up 32%. And I believe just yesterday, 11%, as you said, pulling back today. And Panther Lake is critical for them to have a turnaround in their consumer chip area. And it's an AI chip that will be used in laptops. And it's not even being used yet, but you'll see a rollout in laptops at the end of this month.
Okay, so we're looking for a little bit of an update on this chip, obviously, to take us this next leg higher potentially, because obviously it's had a good run since arguably the summer when we got some of the word about the equity stakes and then some of the tie-ups and some of the investments here into Intel. So this has all been very much a tailwind for this company. What other metrics are key to look out for as far as what we hear from them in this report card this afternoon?
Well, of course, we want to hear anything additional that they can say about the Panther Lake and the rollout of that. I know Microsoft is up and coming in terms of jumping on board and putting in their laptops. But also we want to hear what's going on with their Foundry business, because they've put in themselves $100 billion. All of it has not been spent yet, building out new foundries. And that's supposed to be finished by 2030. You had the United States throwing in another $9 billion, and then you had NVIDIA throwing in $5 billion. So at some point, that needs to pay off. And in addition to that, you have a restructuring that's been in place for this quote unquote new Intel, $15 billion last year. Where are they with that? And a $16 billion for this year was what they had estimated. Is it going to be enough?
Right. Okay. So we're looking for Panther Lake. We're looking for the Foundry business, which has sort of been described as a white elephant. We want to see what's going on there. But, you know, as far as CapEx is concerned, you mentioned some of the investments that they've announced already. Everybody is wanting to see this ROI. Show me proof of all this spend. How tricky is it for Intel, given that, you know, Lip-Bu Tan has previously talked about how these guys have got a little bit ahead of their skis previously? You know, how much of a tricky sort of balancing act is it for Intel specifically with some of those numbers?
Just look at their past history, right? They've always had an issue with being able to deliver, you know, for several years. And I'm very happy to see what's going on in terms of the investment, the reorganization, et cetera. But this is a lot to juggle at once. At the same time, they hope to come out with a data center AI chip that'll be Clearwater Forest. These are a lot of things to handle at once, right? You've got a restructuring that's multi-year. You've got a build out that's also multi-year. Your goal is to be the second largest fabrication facility provider after TSMC by 2030. That's a lot to have on your plate, don't you think?
Yeah, it certainly is. And so that's why obviously the commentary is going to be very, very important here. What about some of the concerns out there about losing market share to perhaps like an AMD, you know, the competition, for instance? What have they got to say about that as far as reassuring the market?
The proof is in the pudding. They think that they'll be able to take back their share. That's been an issue for them. That's why we have an earnings report that's 37% less than last year. Hopefully their hope is that Panther Lake will help them take back share from AMD. This chip is critical to them for the near term, for them to be able to maintain the momentum that they have and for all these costs on multiple sides to pay off.
It's all riding on Panther Lake. Let's see what they have to say about that, obviously going into production very recently and giving us this next leg high that we've seen. A bit of a pullback in trade today ahead of this report, but thanks so much for the setup, Michelle. Appreciate it. Michelle Connell there, President, Owner, Porsche Capital Management. Let's trade it now with Tom White, host of Fast Market. Obviously, we're going to be hearing from Intel later today. What's the example trade and the approach for this one ahead of that report card, Tom?
Yeah, Sam, the bar is pretty high in this one. You've seen the rally over 140% over the last 12 months going into this report. And this is based on maybe the investments from the U.S. government, nearly 10%. NVIDIA with $5 billion investment, SoftBank with $2.5 billion. So that's created some optimism around this stock, and it seems like there's call buyers every day. Option market's pricing in a pretty hefty plus or minus 8% move either way in the shares, over about $4.30 either way. So I looked at a strategy. If you think it's going to continue to go up, it's not a pure earnings play. It gives you some duration in case you don't get the move that you want post earnings. I went out to the February 20th monthly options here. So 29 days to expiration, where I'm going to buy that slightly in the money 53 strike call. It's got the higher delta. It reacts more like the stock. And then to offset some costs, I'm going to sell the 60 strike call. So a bullish $7 wide call vertical here to the upside. You're going to pay roughly, I've got a 240 debit here. It's probably trading closer to 260 now. The stock has continued to move higher. But the debit you pay is going to be your risk. So I can risk $240 to make up to $7 if it gets above that $60 level over the next 29 days. So I've got some duration in this one. If I pay that 240 debit, takes my break even to 55.40 to the upside. That's less than 4% above the current share price in there. So well within that one standard deviation move on this. And so, a lot of people would say, why don't you just buy the 53 call? That's bullish. Well, it's going to cost you more. It's also going to raise your break even on this one. And by selling that 60 call, you're offsetting the costs on this bullish call purchase on the 53 call by over $2. So there's a lot of option premium in those out-of-the-money calls at this point. That break even, as I mentioned, less than 4% above the current share price. And I think one of the keys with this directional type bias, this is a bullish example, that it gives you flexibility. So if you get the move immediately after earnings, it gives you some flexibility as, hey, I can maybe close all or a portion of my position if I get the move to the upside that I wanted. And then if you don't get the move, it also gives you some flexibility to say, hey, I've got 29 days, a month in this trade where I can wait for this stock to recover and maybe get back above 60. So if you're bullish, this trade may work out for you. If you're bearish, maybe buying a put vertical may work out if you think this stock is overbought, because on an RSI, on a technical basis, RSI is about 75, so overbought at this point.
Okay, we'll be waiting to hear from Intel later this afternoon, trading at a 4-year high this morning ahead of that report card. Appreciate the example trade for us today, Tom.